IREN signs Microsoft to $9.7 billion cloud compute deal. So IREN is signing a $9.7 billion 5-year agreement with Microsoft to deliver 200 megawatts of critical IT load at its Childress, Texas facility. The data centers named Horizon 1 and Horizon 4 will be a new liquid-cooled data center built in that facility. IREN, like Cypher, is selling off today. It's down about 10%, but it's kind of caught up in this wider market sell-off. Ultimately, though, just a huge deal for IREN, and I think a really watershed deal in terms of their AI development, signing a Mag 7 company, a significant hyperscaler like Microsoft.
Yeah, and not just Mag 7 company in Microsoft in this deal, but also Dell Technologies, right? By all means, kind of close there. One of the most notorious, hardware providers, and just in general computers for enterprise out there. It's huge, right? We're multi-billion-dollar deals left and right for these companies. AWS in the last story, now Microsoft and Dell. It's absolutely major. I believe here that even though IREN has been kind of stockpiling some of the really high performance new age machines from NVIDIA, that those are used separately strategically within the firm. You can confirm this, maybe add more color for us there, but that these GB300s will be from Microsoft and managed by IREN in this deal. So interesting detail there. And I think the Dell deal is more about the procurement of servers, cables, software. A little bit different, but still $5.8 billion in that deal too. I mean, these are just huge, huge numbers.
Can you give us more detail on the Dell deal? This is an equipment procuring deal in addition to the Microsoft one?
Yeah, it seems like this is they're a part of more of the supply chain here. So like a little bit different from we're going to provide a facility in the compute and use our expertise in actually managing and operating these machines. This seems it's more about the facilitation of servers and cables and different components that go into these operations.
Back to what you were saying about IREN operating its own GPU clusters as well. I think that's why this deal is so significant, is because it really validates the PowerShell infrastructure model that we've seen most of the other miners do for these AI deals. It makes more sense for these miners to play into their core competencies of finding power, managing power, building infrastructure to deliver that power to hardware. But it doesn't make sense for them to necessarily manage this hardware. Managing a GPU cluster is much more difficult, orders of magnitude more difficult than operating hash rate. There's a lot of stuff going on the back end in terms of making sure that those computers are operating properly and delivering a clean product to the end customer. And I don't think that Bitcoin miners, at least right now, have that core competency. Maybe they can hire out for it. But my question then becomes for IREN, if you're leaning into this deal with Microsoft, what does that mean for your GPU cluster? Currently, they have a few thousand online. I think they have roughly 20,000 contracted. Is that an R&D play? Because there is a lot of IP, I'm sure, and there are internal processes for running these clusters that Amazon and Microsoft aren't just going to let these companies take away from these contracts, right? So I would imagine that maybe IREN has the ability to figure out how to run a GPU compute cluster without having to risk too much with its own neo cloud. But that would be my question going forward. What play does IREN make? Do they lean into both? Do they lean into one? Do they take away lessons from one to grow the other? Open questions to, I think, in that segment, unless you have anything to respond with.
No, open question. Interesting to see what exactly they do. I mean, I just think the highlight here is the names of the companies that they're working with that have the balance sheet and the reputation that they do, right? And yeah, I mean, IREN getting a contract with Dell to acquire GPUs and cables and software for $5.8 billion. Like those contracts, that's really something. I mean, these companies do. I mean, you would imagine, right, that they have strict diligence teams that are assessing their counterparties. Yeah, so it's the numbers fly off of the screen compared to what we were seeing not that long ago, Colin. Like, we're covering this sector like even just a year ago, but like especially 3 to 5 years ago. It's a totally different landscape.
Thanks for watching. Be sure to like and subscribe to the channel so you don't miss any of the episodes we put out. Also, check us out on Spotify, Apple, and elsewhere.